Hello traders, D7 here with freetradingvideos.com. Welcome to the weekend edition. And let's start off here with the S&P Daily. This goes back to 2008. We had this big crash. We come down, found a low of 666 here in March, and then we rallied back. And just continued to head up. I mean, 2009 just quite bullish here. And let's zoom in to see where we're at on the daily. Zooming in very closely, we have this little pinching pattern. Technically, we have a little rising wedge. On Friday, we went up, touched this upper trend line, came down at one point, was below this trend line, then came back up. But nonetheless, we're in this consolidation area above all major moving averages. We're looking for a move one direction or the other. The MACD above the histogram zero line, and looking pretty good. We do have a negative tick here and on the daily, but that could change really quick. And coming over here, bringing in the weekly. Here's the weekly, S&P weekly. And we have this uptrend that looks a little wedgy. You can see it starts to pinch up here. But there's our formation. And the thing that I want to zoom in on to really show you is this area that was acting as resistance. We actually closed for the week higher than that. That is a bullish move. And if I show you the MACD, we do have a bearish divergence taking place. But at the very same time, we have, here, let me open this up, a bullish, you can see this tick on the histogram. Let's bring this back down, and we're also on the MACD above the zero line, which is bullish, also above almost all the major moving averages except the 200-week moving average. So we're in this consolidation, a high base. We could very easily explode northbound, but we could very easily drop out of bed. So we want to watch this very closely to see what's happening. It would not have been a bad thing for the last several weeks for you to be sitting on your hands and not trading this mess, because you can see on the daily, look how crazy choppy it got. Very hard to play that if you're a swing trader or an investment trader. Here I'm pulling in an S&P monthly. S&P monthly, we have a trend line coming down, 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 and we have since broke over that. And for the month, we're doing pretty well. November closed very bullish. December, we've already made a higher high. So the question is, will we continue northbound? I think, far as the monthly is concerned, there's a great chance of that. And we have a resistance. You can see the support and then resistance right here, 1165. And if you go to the 100-month moving average, it puts us around 150 or 1155. So 1155 to 1165 is going to be a significant resistance area as far as the monthly is concerned. Remember, the monthly chart beats out the weekly. The weekly chart beats out the daily. However, most of us are swing traders. We like to trade from day to day, and we do all of our focusing on our daily, but you always want your bigger time frames helping you in your trading. So you like to have these other time frames confirming what you're seeing on the daily. So while we're here, let's also go and take a look at the NASDAQ. And here you see on a daily that we have a higher swing high, another higher swing high, and we're working on yet another swing high. I don't know if it's going to be higher or not, because it could be pretty even with this one. We do have a higher swing low. We are pitching together. We do have a rising wedge. What's interesting here is we're flirting really close here with the major moving averages. And the difference here with the NASDAQ and the S&P isn't flirting with these quite as much. And we are here. So we also have a nice bearish divergence on the MACD. Very ominous. We're at major resistance right here for the NASDAQ daily. So I do not see the NASDAQ busting out. Well, let me say this. If the NASDAQ does bust out, it's going against probabilities at this moment. So we're up a number of bars. We're at resistance. we're due for a retracement at least. Look how we're flirting down here with the 0 line. We're barely above it. We dipped below it, we're barely above at this moment, and where this line is should be at least even with this one, but we're not. So this bearish divergence is even getting nastier compared to price action. But the weekly beats out the daily, so let's watch the daily, or the weekly, I'm sorry. And look at this, another bearish divergence. And you can see that we had this rising wedge that broke down. We came up. What was acting as support now is acting as resistance. And then we have this high base. High bases are bullish. We have the 200-day moving average acting as resistance, and major resistance up here on this trend line that comes up. So this one's kind of caught between a rock and a hard place. Which way will it go? It can go any direction it wants to. If it busts out of these highs, making new highs, it's going to have some areas it's going to have to cut through. It could certainly do that, but that means this bearish divergence on the MACD needs to get some legs under it and shoot straight up. And that will only happen with price action shooting straight up. So that's what we have to watch for if you are bullish in this market. In the monthly, which beats out the weekly, this is the big dog of them all. Let's look at this. This one isn't nearly as bullish as the S&P. Now, why am I looking on my weekend edition at the NASDAQ? Because the NASDAQ, a lot of people argue, leads the broad markets. And there is a lot of truth to that. So I want to show you what type of formation that we have. We have what's called a symmetrical triangle. A symmetrical triangle can break out or down. No one knows. But long as it's within the confines of the triangle, the upper and lower trend line, what I can expect is for resistance to hold and drop. And what we have here is we're at major resistance or close to it. So far as the monthly chart is concerned, we have the 50-month moving average acting as resistance right there. And I could easily see us heading north, you know, up here and smacking our head somewhere around the 2300s, 2325 area. I could see as being a significant resistance, hitting our head, maybe even coming right back down. So we're up a number of bars: 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 if you don't count 1, 2 of these, at least 7. So studies show 5 to 6 bars is usually your extent. We are or your extension. We are far past that, so we're very extended. Many people are saying overextended. And what we do have here on the monthly chart, look at the histogram, getting smaller, 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 smaller. We had a great run, and now look how it's starting to roll over. It soon will get a negative tick. The last time we had negative ticks, that was a monster bloodbath of a drop right there. And so when this thing curls over like it did here, what will happen? So that's the question. So you want to be watching this very, very, and very closely. Now, before we leave, we like to look at the group and the group sectors, and let's go to FinViz to take a look at that. Alright, and here in FinViz, for the week, utilities did the very best, consumer goods, and then financials picked back up. I was really worried about that the last weekend, but it was good to see financials come back in. Healthcare, down there near the bottom. Basic materials on Friday took a big hit on the chin. Matter of fact, gold on Friday dropped more than 5%. So some profit taking place. Here's the 1 month, and this is one I pay a lot of attention to. Conglomerates doing exceptionally well, utilities doing well, healthcare, industrial goods, but financials doing the poorest. And while we're here, let's go ahead and look at 3 months. Financials doing the very poorest. So that is worrisome. So let's keep a close eye on that. Thank you for being a part of freetradingvideos.com. We look forward to you and helping you become a better trader.